Good morning, traders. Happy Tuesday to you. It's 8:03 a.m. Chicago time on the 19th of December, 2023. This is episode number 2593. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. As an aside, I also want to remind you that will be on tomorrow night U.S. time here. Tomorrow night at 7 p.m. Eastern, 6 Central. That's midnight in London. On our annual Fireside Chat show for 2 hours. We'll be talking trading, we'll be talking macro, we'll be talking zero DTE, GEX, GEXBot, mindset with Jared. There's a lot packed in. We'll hear from our mavens and so on. There's a lot packed in here. So we'll catch you guys tomorrow to sign up for this. Excuse me. To sign up for this, there's no membership or payment required. This will go out over YouTube Live through go to ct.pro/ct-fireside /ct-fireside lowercase. Please go to that link and set a reminder on YouTube for tomorrow at 7 p.m. Eastern. Okay, so let's hit it. What are we looking at for today? What is today's story? Overall, mild risk on continues. The Russell picking up pace here. The Russell's been kind of sideways after that pop higher last week. It has not kept up with what the NQ and ES have done. The Russell, of course, is a small cap index, so it's got different priorities. But it's up quite a bit, 74 basis points this morning. It's lifting our risk on sentiment indicator. This morning, pre-market, the big announcement was really from the Bank of Japan. The Bank of Japan left policy unchanged. A hawkish rate guidance and hike in January expected but not delivered. So the market really expected the Bank of Japan to come out and say, hey, we're going to be hiking in January of 2024. And they didn't deliver on that. Overall, it was quite muted. So the Nikkei 225 popped higher this morning, up 1.41% after being muted yesterday in anticipation of the Bank of Japan announcement. So pretty much a quiet session this morning. We got the Canada inflation, which came in higher than expected. U.S. building permits. The prelim number came in softer for building permits. U.S. housing starts came out strong. And overall, for the rest of the week, and next week, expect a quieter market. It's just the nature of the beast this time of the year. We did get Accenture this morning. Accenture reported basically in line, $3.27 versus $3.14. Their revenue is in line. FedEx comes out after the close. FedEx estimated revenue $22.4 billion and $4.20 on Q2 period. So that's where that stands. For the rest of the session, we have Bostic at 12:30, but let me refresh. Yes, Bostic at 12:30 Eastern. Let me check a different calendar. Bostic. Wo sind Sie, Herr Bostic? Yeah, it's confirmed. 12:30 Eastern for Fed's Bostics at a fireside chat. Look at him copying our fireside chat from tomorrow, but doing it earlier. Bostic is a 2024 voter, is a dove. Those comments might move the market. And then the rest of it's really not much. Fed's Goolsbee this evening. The Japanese balance of trade this evening as well. and the Chinese loan prime rate as well. Looking at the S&P multi-distribution profile. Where do you guys? Oh, Barkin at 9:30. Barkin. Where are you? I don't see Barkin at 9:30. Looking at two different calendars here, professional calendars. Could they have missed it? Both of them. Yeah, I don't see Barkin unless that came out this morning or something. I don't see Barkin on here. So if they're on there, they're on there, but I don't see it at all on two independent calendars. The S&P multi-distribution profile this morning, active price discovery. We have 130,000 contracts traded in the overnight session. Pretty light, very light. Inventory 70% long, and the range is pretty decent at 16.5 points. The market keeps pushing up higher. We've moved the point of control to 47.96, which is much higher than yesterday's. Yesterday's was 47.79, the overnight point of control. So we can see that we're accepting value about 20 points higher this morning. Let's take a look at the charts. Here we are. This is the S&P. This is what we've done. We've shifted from yesterday's balance. We've squeezed up. Pretty interesting trading yesterday in that it was relatively dead early on, and then once the IB was done, that's when it started to take off. Multi-distribution profile yesterday, again, active price discovery, selling into the close. And then this morning, it just came right back in. Again, multi-distribution profile, active price discovery. We see that the point of control is on top of the full session VWAP, full session mid. So just like yesterday, we expect a choppy open. What it does from there is a different thing. We're just looking at the opening indication. The opening indication at the open, we have a pretty weak high on the overnight session so far, 48.04. We're pushing up against the century figure here at 4,800. So expect noise in this area. The one-time framing continues higher. The delta is pretty flat this morning. The pace of trading has been pretty flat as well. About 100 or so contracts per second over the last 8 seconds or so. Not much doing, especially this time of day where there's usually an adjustment. There's usually a quick drop or whatever. And so overall, pretty choppy, and we're in a rally, so we're pushing these highs, and as we push highs like we are doing, we're going to get lower volatility, lower range, and a market that is basically buy and hold. There's no reason to adjust positions in this type of market. So those who are participating are really hedging risk or are looking for alpha by holding positions. The NASDAQ, same story. NASDAQ, different animal, much stronger. I mean, fading the NASDAQ is a tough gig right now. If you look at this thing, look at how it's moving value up the screen. This is RTH only, and from day to day, you have the point of control shifting up. It's just skipping uphill, the point of control. So this isn't a market you'd want to fade. I don't see us getting any benefit by trying to find shorts in the market. Trick thing is, you shouldn't be finding trades. You should be waiting for trades. If you find yourself finding trades or looking for trades, you either don't have a plan, or you're seeking P&L, you're trading P&L. Really, it's all about just sitting and waiting for the setups to show up, and that's what makes trading boring, contrary to the Lamborghini and Porsche advertising humble braggers out there on Twitter. It's not at all a trading is just not an exciting thing. It's just there are points where it's exciting, Lehman Brothers or whatever, COVID. But in general, it's a pretty boring process. Here's crude. You can see on crude. Let's bring in the other volume. You can see on crude we're flattening out where we were in a double distribution. We're flattening out that double distribution in crude, and 76 and a quarter remains the attraction above. I still believe that crude is very likely to walk itself back to 76 and a quarter. We've tested all the way down to 68, to the 68 handle, and we found our buyers down here. We pushed into the 80 handle, and we found our sellers up there. And so the idea is we've checked the upside, we've checked the downside, and we are likely to just hold in the middle, to come back to the middle. So we found an extreme check. We found an extreme check, very likely to walk itself back to that 76. The price that OPEC wants it at is right up here at 80, and that's been acting as support / resistance. But overall, crude is just kind of sitting sideways. Here's what the Russell has done. The Russell popped last week along with everything else, but instead of pushing higher in a channel like the S&P and the NASDAQ have done, money's being allocated out of the small caps, it seems, and into very large caps, mega caps. So this thing is actually in a one-time framing down posture and looks to be heading towards closing that gap below. That gap with the point of control against the high. Very interesting setup there. The Russell's just kind of been trading sideways for the last couple of days. Let's look at the TPO charts to see what the auction is doing. Auction, yesterday we opened above the prior day's high. We could not close the gap. It was very clear from the very beginning, except for a brief moment of balance, it was clear from the very beginning that the market was seeking higher. The only setup I saw yesterday was an IB high pullback briefly. I want to do this. I'm not going to replay the whole day, but I'd like to just show you what it looks like and narrate. What I'd like you to do is watch this panel here. This panel here is a footprint RTH only. And the panel on the right is the TPO chart. But I'd like you to watch and just absorb how the auction takes place. When I'm talking about price discovery, it's really important to have a clear idea of what that process looks like, because this is what we're trading off of. We're trading off of how the market actually discovers price. So here it's running at 80 times. This gives us the whole RTH session in 5 minutes. But you can see we opened, quick test below that failed. So you can see there's an excess underneath the open in the first bracket. The first bracket comes to an end. Now it's very important to see what the second bracket does. The second bracket is bullish. The second bracket breaks the first bracket to the upside. So let's break those up so you can see them better. So you can see bracket B breaking bracket A, a big fight at the 85, right? So back here in this chart, there's a big fight right here in the 85 area that takes place. And then bracket C fails to take out bracket B and comes all the way back. This is where I start to go from bullish to neutral. So now we have range extension down on bracket B in bracket C. This is not expected. So now it's either we're balanced or we're going for that excess down below the open, and we are likely to now respond back. But it doesn't do that. I want to pause this here for a second. It doesn't do that. It comes all the way back, fails to take out the open. That's just the process it went through. It fails to take out the open. And then what does it do? It extends bracket D against C. This is neutral to bullish. So now it is about bullish. Now it's all about waiting for your long setup. So now we take neutral and short off the table, and it's really about looking at the rotations and identifying failures against known levels. Known levels could be anything you trade. Could be a moving average. Could be, I don't use moving averages or indicators like that at all. Could be IB high. Could be the opening swing high. Could be the open. Could be the prior high a day. Could be any of these day or week references. We can see from this action here that the short time frame is in control. That means day traders, short-term traders. So we can lean against the short-term references. But here's D extending C, and so it's bullish. So now, really, it's about waiting. So let me see if I can walk this forward. It's about waiting for a tap, and there's the tap. Here's the tap right there. See that E bracket low? That's an IB high test at the beginning of the bracket. And as long as it holds there and does not extend below here, so you have 6 ticks of extension below, tells us something's wrong. So this is not a recommendation to trade, but this is a low risk setup, and we have room to 800. Remember, I talked yesterday about 4,800 being the key target now. And then from there, we have some levels above there at 4807, 4817, and so on and so forth. But really, so there's a lot of upside for approximately 2 points of risk on this. And here's what it ends up doing. As soon as it extends that E bracket higher, you need to just let it go. So see this consolidation, it's fighting, it's flagging, and boom, F bracket extends E bracket, and now we're trailing the bottom of E bracket. When F bracket gets done, we're trailing the bottom of F bracket, and so on and so on and so forth. And this is how the auction plays out. Here we push to 47.99 and a quarter against the 4800. We establish single prints between the F and G bracket. We expect those single prints to get filled. Generally, single prints get filled. As long as it doesn't take out the low of F, we remain bullish. Why am I showing you this? The reason I'm showing you this is to help you stop looking at every minutia on the chart, to sit here and focus on the order flow or whatever, scalping, when the bigger picture is much clearer. It takes a long time for the big picture to form. So the analogy to this approach is like somebody watching an action movie at normal speed. But when you're trading, especially in a rally market, it's like watching an action movie at a quarter of the speed. So you have to wait a long time for that punch to go through, for that shot to hit. Just imagine watching a whole movie in that stop shot, that slow shot of everything kind of happening really slowly. This bores people to death. And so what they do is they go and they call themselves order flow scalpers, or they watch order flow scalping videos, and they believe that that's the way to go. You can make money in that. I'm sure you can. But, nothing's guaranteed. The past is never an indication of the future results. But really, it's about waiting. It's about sitting things out and just kind of letting the market do its process. If the market had broken the next bracket lower, broken the next bracket higher, then came back and broken the next bracket lower, we know we're in an outside-in market, and it's all about trading edges if you're going to trade, or not trading at all. So the reason I'm playing this back to you, and we can keep this going if you like, but I do need to cut out. Here's where this is our first indication that something's that buyers are not able to defend these lows. So the one-time framing came to an end here, a 3-tick range extension to the downside. This is where you start to go, okay, I'm going to exit or lighten up on the next retest higher. Boom, there's your next retest higher. Take something off the table. It is very likely to make its way back, is what's expected, right? This is a market that's now gone into consolidation. It may still keep running, but in the time frame that I'm looking at the market in, this is all I need to see. I need to see that the buyers are letting go until the next setup shows up, which is a range extension pullback to a predefined area. Again, the same thing that got us into the trade down here. Until that happens, I'm going to sit sideways. I'm not going to participate in this chop. This is very likely to extend higher. Why is it very likely to extend higher? Because it ended up creating a weak high. Markets that challenge the high don't hang out at the high. This is a market that's not hanging out at the high, so this is what's called an excess at the high. So this, you could see that there was no volume. Look at the volume there. This is what an excess looks like. No volume, leaves a bunch of TPOs behind and goes the other way. So the expectation is that this is very likely to extend down, and it did on the close, right? So just the point is to just read the narrative, read the context, not to come in the middle of it and go, oh, see, you expected it to go up, it went down. Yeah, that's part of reading the market and where it is now. And the story changes. You're either leaning long, neutral, leaning short. My job is to eliminate those other possibilities as early as possible. So if I see that the market opened and it couldn't move down and it started to break higher, I eliminate shorts. I don't have to worry about shorts. Whereas the rest, those traders who don't have a plan or are trading every tick, are open to a short or a long or nothing or scalp, or just keep it easy. Keep it simple and just figure out how to eliminate one side. If you can eliminate one side, now you've doubled the amount of opportunity you might get, because you're not looking for opposing opportunity and you're not making an argument for a short when the market's leaning long, that sort of thing. So that's what I wanted to pass along is today's wisdom today's wisdom segment. I'll let you go. This was a long one, but this is something you probably want to practice while the market's slow today. To just step up, formulate your idea on a bigger time frame, then go and execute on a smaller time frame. That's the approach I've been using for the last, I don't know, since I moved away from scalping about 18 years ago. Good luck, and I'll catch you tomorrow morning and tomorrow night. Take care.